All right, it looks like we're live. Hello, everyone. Title of the live stream today is Is the Federal Reserve and its international dollar worth fighting for? Yeah, and the term international dollar is something I came up with because I read an interesting article in the FT written by Barry Eichengreen, who's a relatively famous economist. Um, I think he's from UCLA. He's a Keynesian, of course, but nevertheless, I think it was an interesting article. And we're going to have Rafi on today. We're going to have Clive and also Phil Lowe, who's usually on with Rafi quite a bit. I interviewed Phil Lowe earlier this week, and so it should be a good panel. I guess. And yeah, hopefully you have a lot of questions and we'll try to answer them. Yeah, so that's what we're going to be doing. Um, let's have a look. Yeah, there's a lot of you here already. So thank you for your interest in the channel. Pablo Pina's here, Justin Taylor, Endurorama, Hyle Silver, Yodi. And if I miss you, it's not nothing personal. It's just that there's so many of you. David Bagley, Trump is playing his part, he says. Riqua, hi Mario from Canada, starting an electoral campaign. Yeah, Canadian election is on the 28th of April. They called it quite early, I guess. They had till October to call it. Our Elkas is here, HR from Australia. Nick Benfield from Cranley. Dilwyn Roberts, he's a regular has been for a long time from North Wales. Mickey, Dutch Libertarian, Jeff 43, Darren Smith, Mark CH. Hi, Mary. Looking forward to the discussion. Yeah, me too. Mithras, I believe in predestination. I believe also in order from disorder, and order has very predictable outcomes. We are Borg. You will assimilate resistance is futile. Wow. Grant Walker in Switzerland. Jillian B. Hi, Jillian. Alan Brown. Hi, Alan. Aaron from Buffalo, New York. Paul Dockery. Hi, Paul. Stacy Roderick from Central Illinois. Gemma Wood. Rick Enfed says it will be a great show. I hope so. Popcorn. Pablo Pino, USA going to become a Commonwealth nation? Um, I don't think it's a good idea. I mean, the founding fathers fought to leave the British Empire, and the Commonwealth is kind of a substitute for that. But who knows? Don't fight the riptide. Not waiting on ending the Fed. Private banking has been life-changing regardless of what the Fed does. Assets that will never sell, but instead to use as reserve capital investment lending. Pete Dutoit, Mel Mann, from Richmond, Virginia. Yeah, there's a Richmond in London as well. Bo Diddley from Ohio. GTSY today. Um, what's I'm not sure I know the acronym GTSY, but maybe you can let me know. Sean says, good afternoon, Mario. Good afternoon, Sean. Mark Sneed from Canada, I guess, 51st state. I don't know. Or maybe you're in Greenland. Platinum NW from Saint-Germain-en-Laye, in France. Mohammed Fazal. Hi, Mohammed. Yes, I'm okay, Mohammed. Thank you. And you? Michael Kennedy, what time to be alive? I guess any time is nice to be alive. That's the way I look at it. But yeah, I know what you mean. Mark with a K from the Netherlands. Chris Conman. Hi, Chris. Kalbir Singh is at the in the London Underground. Interesting. Oh, good to see you, Bo Diddley GTSY. All right, I get that now. Good to see you too, I guess, even though I'm not seeing you, but Paul Trainer. Hi, Paul. And Mick added a 1927 Swiss 20 franc. Yeah, they're nice. The 20 franc, the Vreneli, they're called the Vrenelis. They're about 0.18, I think they're 0.1867 of an ounce. All those European 20, well, 20 francs, 20 lira coins. Darren Smith, I did play golf today, actually. It was nice. It was warmer, and I won the Swindo. With another guy, I won 30 pounds. So I played quite well. And so that was good today. Yeah. Teed off quite early and was finished before midday. Rafi's here. Hi, Rafi.
Hey,
You-
hey,
you're punctual ahead of everyone else today.
thank you.
You're welcome. So we
I
got Phil
I live for
Lowe.
punctuality.
We got Phil Lowe and Clive coming on. And I'm I come in on early to say hello to everyone. That's about it. So, but the topic today, I sent you, I don't know if you had a chance to read that article, Can the Dollar Remain King of Currencies, in the FT? So I named the live stream, the title, is the Federal Reserve and its international dollar worth fighting for? Because what this guy wrote, and I'll bring it up here quickly. Uh, I know it's a little early, but yeah. Oh, yeah. Bitter Draft is here. Let's stop sharing. Let's wait for everyone to come on.
Okay.
He's just, there's Phil.
Hello.
Hi, Phil.
Hey,
Hey, how you doing?
I'm good. What's your mug say, Rafi?
my book,
No, your
Your
mug.
my mug. It's just something about being thankful or some, hokey little mm, stuff.
Uh,
I think my wife won this at a grab bag gift something or something. I don't know.
good.
my brother got me a mug that says disappearing civil liberties, and it's got the U.S. Constitution, but whenever you put hot water in, all the ink disappears.
Whoa.
Whoa.
Yeah.
My
Clive
wife
has just
won
come
this
on.
at a grab bag gift something or something. I don't know.
Let's,
Oh,
let's
we've
repeat
entered a
it.
time loop. My brother.
Hi, Clive.
Hello, good evening, Mario.
Good evening.
I can see Rafi and Phil are online already. I'm sorry I'm a bit late.
No,
Good to
they
see you
Yeah.
again, bud.
no, they just got here. So,
Okay.
uh, yeah, I wanna, I don't know if you guys had a chance to read this article here. Um, can the dollar remain king of the currencies? And this guy is quite a famous economist, even though he's a Keynesian, Barry Eichengreen. And so one thing that's interesting, they've got this silver certificate on, and he's talking about the Federal Reserve, how the Federal Reserve helped make the dollar an international currency and like the major reserve currency. So I found it really strange that they put a silver certificate. It's not even a Federal Reserve note. And the other thing I noticed is that Douglas Dillon, he was the Secretary of the Treasury from 1961 to 65. So he was nominated by JFK and he stayed there, I guess, under LBJ.
Mm.
And he was, yeah, so, but they've got it here, Series G, 1988, which makes no sense because they didn't have silver certificates in 1988, but that's just something I saw. But
Yeah. Did you
yeah,
look up this? Did you look up the serial number on the dollar to make sure that it was a really? Yeah.
no, I didn't. No, I just thought it was weird he's talking about the Federal Reserve. So uh, I wanted to bring this up because I made a comment in the comment section. I don't know how many likes I got because I took the screenshot right after I wrote this. But so what I said is, it's interesting that the dollar bill shown in the article, okay. Uh, and then I said, U.S. Constitution defines the dollar as a weight of silver and gold. Many argue that the Federal Reserve Act and the creation of a central bank is unconstitutional. Mr. Eichengreen argues that the independence of the Fed is sacrosanct because it helps maintain the value of the dollar and provide liquidity. If one looks back to 1913, when the Federal Reserve Act was signed into law, the dollar was measured as 120.67th of an ounce of gold. But as of yesterday, the dollar that has been under central banking control is worth 1/3024th of an ounce. And then from 1834, when they revalued like from $19 something to 2067 to 1834 to 1934, I said the dollar was steady as a pet rock, as it was worth 120.67 of a troy ounce of gold. And despite that, America was transformed from an agrarian economy to the most powerful industrial economy the world has had ever seen. So I'm going to start with Rafi because he came on first. So
Yes.
what do you think? Did you read that article, or what do you think about what I said? And
Obviously, I agree with what you said. I didn't read the article. Um, I should have. Maybe I'll read it like in the middle here so I can comment on it in the middle of the show. But yeah, I mean, Ron Paul was talking about this. I think, since the 1980s, like he makes when he was a congressman, he would make constitutional arguments or arguments about the constitutionality of whatever, and that's like it was generally the most boring argument that he could make for the most important and the least important at the same time, because nobody's cared about the Constitution for a very long time. The only thing that anyone even cares about a little bit about the Constitution, and it's not much, is still the freedom of speech. That's pretty much what's left of it. That there's any popular support for at any level. So you can't really make. I'm not saying that your argument is wrong. I'm saying that unfortunately nobody cares, and they haven't cared for a very, very long time. Maybe when there's a revolution or an endgame or what have you, we can go back to an actual constitution. I mean, we'll see, and how long it'll last this time, who knows?
yeah. So what about you, Phil? You were here second. Sorry, Clive.
I did read the article. I've read a lot of these articles. The the gist I get from all the Keynesian economists saying is, oh, well, we better be careful about how much we print, or things are going to get out of control. It's the same. It's really the same article every time, and they usually try to take a dig at the president as well. When you understand that gold is money, it's like understanding that the sun is the center of the solar system. When you don't understand that, you think the Earth is the center of the solar system, and so when you put your telescopes into the sky and view the stars and the planets and the heavenly bodies moving around, if you have a geocentric view of the universe, of the solar system, the planets do this. Like the moon does what it's supposed to do around the Earth, but all the other planets do this all around. If you can look this up, you can see the courses they plotted in the 15th century, the 14th century. They tried to plot what the planets were doing. And through a lot of math and a lot of hard work, they could actually sort of guess. They could do a pretty good job of where the planets are going to be. They had some predictive capabilities, but they had no idea why the heavenly bodies were doing what they were doing. They just said the angels want the planets to move that way, so that's the way they move. Once you put the sun in the center of the solar system, you say, and you can explain it with gravity. You say, oh, well, the planets orbit, the bigger bodies or the smaller bodies orbit around everything, and everything sort of looks much more like clockwork. And now you can explain what's happening because you can explain it much more simply. You don't need to use weird discussion about the ether. You can say, oh, gravity is pulling the planets. They want to shoot off in a straight line, but the sun is keeping the planets moving in a rotation around it. It's the same thing with the dollar, right? When you view the dollar as money itself, you can't really explain. You could say, okay, if we print too many dollars, we're going to have a crash. If we don't print enough, the banks are going to collapse, right? But there's some sort of weird correlation between if we print more dollars, the prices of consumer goods don't always go up. Sometimes people put it in over here, right? People do different things. So if we can just get enough smart guys into this room, we could figure out how best to manage the production of Federal Reserve notes. But once you understand that gold is the money and the dollar is just a coupon for gold, you say, oh, we've just printed 90 million. We printed notes for 90 million tons of gold. We're really in trouble. So you
Yeah.
just have to, but these people that write these articles, and it's most people, are in this frame of reference where the dollar is the money itself. And it's not an unreasonable supposition to start, right? Because if I say gold is money, people say, what do you mean gold is money? You can't buy anything. In fact, if you show up with a gold coin, you might have trouble turning it into something like food.
Yeah.
But if you show up with dollars, you use it as money. So how are you supposed to explain to somebody that gold, which they cannot use as money, is in fact the money, and the dollar, which they are using as money, is in fact not the money? So it's a
Yeah.
reasonable position to be in, but unfortunately it's wrong. And so the conclusions, all these articles are the same thing. They're all essentially the same thing. Oh, the tariffs are too high, the tariffs are too low, this, that, and the other thing's wrong, and therefore the Fed needs to print X amount of
Yeah.
dollars tomorrow.
Wow.
Yeah, I guess I agree with you. Uh, and I guess the word dollar is actually derived from the silver dollar.
Yes,
And I guess what you mean is the paper currency called the dollar.
the
Uh,
Federal Reserve note.
and I agree with you that gold is money. But there's a few people here who disagree with you about the planets and the sun being at the
I
center. A lot of flat earthers here, I think, but we're gonna leave that aside. But but I have a dollar here. Like, there you go. That's a silver dollar. That's exactly a dollar in silver. I have a little gold, $1 in gold, but I don't have it with me. So, Clive, did you get a chance to read that article? Or if not, what do you think about the whole thing?
Well, Mary, I spent the entire day in the garden
Yeah.
planting things, so I haven't actually read it, but I have read it while you were talking here earlier, or bits of it. And I'd like to. There's actually a very important paragraph. This is a very, very long article, but there's a very important paragraph which I don't know if you were planning to read it out, but I think it's worth reading because it says shivers down the spine, my spine, and also down the spine of anybody who's holding treasury securities. And it reads like this. There are questions, moreover, about whether foreign holders of US debt securities will continue to be treated fairly. Scott Bessent, Trump's Treasury Secretary, has reportedly mulled the possibility of converting 5 and 10 year US Treasury bonds held by foreign investors, that's you and me and your pension fund, into 100-year securities bearing low interest rates. In other words, you never get paid.
Yeah.
Whether those investors like it or not. And then it goes on a little bit further in the article to talk about the head of the Council of Economic Advisors, Stephen Mirren, talking about slapping a user fee on foreign holders of treasury securities, and basically that would be a withholding tax. It's illegal to put a withholding tax on the treasury securities, but if they put a user fee, it'll be on the interest payments. It'll be effectively the same as if they had a withholding tax. In other words, if you happen to be a foreign holder of U.S. Treasury securities, you might not be getting what was promised on the tin.
Yeah, and it's interesting. Yeah, I did read all of this, and um, switching 5 and 10 years to 100-year securities. I spoke to someone I met in Switzerland last November at a mining conference, and we've gotten to talk a lot now uh, over the like through an app. And he told me the story of how Mussolini, or yeah, the Italians in the early 1900s, they basically, if you had a 3 month Italian treasury bill, Mussolini turned it into a 30-year one. So it seemed
But
like the same kind of thing. And I think the UK government,
yeah,
they changed the coupon on the consoles, was it?
Yeah, my grandfather had the same trick played on him with the war bonds. They basically turned them into perpetual securities at a low coupon.
Yeah.
So,
It,
governments can do this. So be warned, if you own government securities, they might change the rules on you.
it shows you the position. It shows you how bad the books are that they're even discussing this, because this is, the U.S. Treasury is supposed to be the fountain of stability and the core that holds the whole system together. And they're talking about turning all this into 100-year, and they're gold backed, right? These new ones are supposed to be directly gold backed, which is kind of funny because the current treasuries are dollar backed and the dollar is supposed to be a note for gold. So they're just admitting that the current treasuries are all completely worthless, and they're just restarting the treasury bond system with a new set of bonds that they swear super duper are actually gold backed, and in 100 years you get your gold.
Yeah.
Yeah. Wait,
But
Mario, this is I just wanted to pipe in here that that would be the same thing functionally if we're going to take Daniel Oliver's view of the balance sheet and the interrelationship between the dollar and the balance sheet and gold replacing treasuries once they get devalued. It's the same to turn 10-year notes into 100-year treasury securities would be functionally the same thing as what they call a gold revaluation. Because if you're going to make the 10-year into 100 years, that means you're devaluing the debt. Once you devalue the debt, that is a gold revaluation. It's just not to a specific number that they're making up, but it's the same thing. You're either going to value gold or you're going to value the debt. If you devalue the debt, you revalue gold. If you devalue gold, you make the debt value higher, but it's a seesaw. You can't get out of that.
yeah,
Just carrying on, Barry, on that, the Italians did exactly the same thing to me. I held Italian government bonds, and I was expecting some kind of default or uh, haircut. But what happened was the ECB basically stepped in and said to the Italian government, "You better change the law, and we want you to change the law so that we get paid in full, the ECB gets paid in full, and everybody else gets screwed over." So I got royally screwed over, and I had these fairly short-dated, reasonable coupon bonds where I should have got a haircut. Instead, they changed them into a host of very long-dated, very low coupon bonds, which was, to all intents and purposes, completely worthless. So that's a European government doing it in recent times. This is in the last decade that this has happened. So these sort of things can happen. If you own government bonds, you could be screwed over. I strongly advise people not to hold this type of asset.
yeah, it just amazes me that the finance industry, like the pension fund managers and all these people, and the regulators are considered bond safe still, and that the 60/40 portfolio is still important. But I just want to show you and the viewers. Uh, I saw this on X. And I think this is the reason why. You look here, the left, this axis here has got the dollar as percentage of total FX reserve has gone from 66% to now like below 58. And then you have gold and the euros on this axis. So, but gold has gone from less than 10% and is now overtaking the euro. And I think that's going to continue. And I wouldn't want to hold euros either. Have you guys seen the story that Ursula von der Leyen from the European Commission, the president, unelected at that, she they're looking at taking people's savings. They're saying if you have too much savings and you're not doing anything with it, we're going to take it. Have any of you heard about that?
I have not heard that directly. I was just talking to a viewer of mine from Greece who was telling me about the Greek financial crisis in 2009. He was talking about how the ATMs just locked up and they could only withdraw 60 euros a day. And the everything else, the prices are of course skyrocketing and the whole thing, people are fighting over tubes of spaghetti at the grocery store. So it's probably the same thing. Now, are they gonna lock down ATMs, or are they talking about just like if you have certain amount of savings in the account, it's just you don't have it anymore?
No, I think it's like maybe forcing you to do something with the savings, put it,
Oh, okay,
yeah,
forcing an
to put it
investment
in
or whatever.
buying government bonds maybe and
Ooh,
other.
there you go.
But we have a question here. Thank you, Chris, for your super chat. And I'll get Clive to answer first, and then Rafi, and then Phil. He says, if gold is revalued to current levels, what effect would that have on the silver price? Clive first.
Well, yeah, first of all, little correction. I did say it was the Italian bonds which defaulted on me. It was actually Greek bonds. I
Yeah.
slipped up there. Yeah, what happens if they revalue gold to, and we're talking about the federal, the Treasury changing the price for gold from the official price of $44 or whatever it is to $3,000 or $4,000 or $5,000 or some other figure? Well, clearly, that would the immediate effect will be a lot of people will say, "I'll take that profit." They'll be handing in their gold to the U.S. Treasury to collect much larger sum. But what are they going to do with that gold? Well, I think a lot of them will buy another precious metal, which hasn't gone up quite so much, and that's silver. So undoubtedly, the silver price will climb a lot on any suggestion that gold is being bought by the Treasury or where if they've set the official price at the market value. I don't think they're going to set it at $3,000. I think if they do anything, they're going to set it at a much higher level. And the reason they're going to, I think they would do that is it will allow the Treasury to sell their gold to the Federal Reserve, booking a profit, reducing the national debt. The Federal Reserve will have to pay with newly printed cash. And then immediately afterwards, the Treasury would buy back that gold at the same price, but issuing the Federal Reserve with gold certificates, which won't count as debt because it's balanced by the gold they hold. And therefore, what the government will have achieved will have been to reduce its debt and also reduce its deficit for that particular year because it will book to profit. But of course, as per the question, I think the immediate effect of that will be to push up the price of silver a lot as well.
Yeah, I think eventually the gold silver ratio will go to at least 15 to 1. Rafi, what's your view? Do you think there will be revaluation and what would happen to silver?
No, I don't think there's going to be. I think they're talking about it. And I know I did a video about this the Bitcoin Act thing, where purportedly they want to raise money and for the Treasury to buy Bitcoin with gold certificates that they're going to revalue a market. I don't think any of this is going to happen. I don't think they're going to touch the price of gold because if they do, I think that's just the end. I think the entire global monetary system will crash within days after that.
That would be good though.
And yeah, it'll be good, but it's not that's not what they're going for.
But maybe they'll make a huge mistake because they don't listen to us.
Okay, it's possible they might not understand that if they revalue gold to even below market rate, it'll just destroy the entire bank system. They might not know that, and they might do it. And to me that would just be that would be like the dumbest and most anticlimactic end to financial history imaginable. It's just like why you're gonna do all this just to end it like that, like to shoot yourself in the foot thinking it's your enemy's foot. Like what are you even doing? Okay, but maybe. But if it does happen, and it's possible, then silver should go at pro rata. If we're at what we're like 85 to 1 now. So if we maintain 85 to 1, then gold moves up from 42 to 3,000, and then silver should move up by the same ratio,
Yeah.
just to maintain the ratio that we're at now.
Before we turn to you, Phil, Frank Cavija, thank you for your super chat. He says Silver Squeeze 2.0 on March 31st. So I think that's next, not this Monday, but next Monday. We're supposed to buy a bit of physical silver. So Phil, I guess what do you think about silver if there is a revaluation, and do you think there will be a revaluation, or you don't
Well,
think?
we talked about this on our
Yeah,
interview, my interview with you. Yeah, if they're throwing these ideas out there and they're saying like, oh yeah, this will have absolutely minimal effect. It's just an accounting gimmick. It doesn't affect the real world. If that was true, they would have done it a long time ago, right? If they could just move it from 42 to 200 or 300, they would have done it because it frees up all the, it does all the stuff, it does all the accounting stuff they say it does. But they're not doing it because they know it'll blow a hole in the system and that will cause the end game. So, I mean, the will a revaluation affect the price of silver? Absolutely. But it's also just going to cause the end game, and we're going to be back on 15 to 1 silver and
yeah,
revalued gold to whatever it is.
yeah. I
Now, whether that mechanically that might follow Clive's path where he was talking about people redeeming the notes and then buying silver with it, that could mechanically do it. I'm just thinking about it, from the Austrian economic sense, not really the accounting sense of how the books get balanced. I know they will balance because balance books have to balance, but I don't know the mechanics of how they're going to do it.
yeah. I want to share this post here. Uh, I don't know who this guy is, Brian Cates, and he said, "Watch the globalist cult bankers lose their I won't say the word when Trump announces the switch back to United States note backed by gold and silver, so from Federal Reserve notes certificates." And then Ronan Manley, he's from I think Bullion Star in Singapore. He's quite, yeah, he writes some good stuff. He says, it will never happen. Trump is under 100% control of those who run the private Federal Reserve. I thought that was a good topic to touch upon. So I'll start with Clive. Do you think we'll ever see the U.S. go back to, the Treasury going back to issuing like money, i.e., gold and silver and certificates?
Well, I I think we're in a situation where the level of debt in the Western world, including the United States, is out of control. And with the way that the interest payments on that debt is likely to go, there's either got to be a default, or, and I don't think that's very likely with countries which print their own money, or there's got to be some sort of hyperinflation as the money supply accelerates away to cope with the interest payments. So that would obviously have an effect on asset prices, but ultimately it would also have an effect on consumer prices and retail prices. And we'll get to the point where something has to be done. And I don't see that there'll be enough appetite to raise taxes massively, because no matter how much you raise taxes, it's not really going to make much of a dent in the national debt. So I rather think that we will have a situation where they have to find a solution, and probably that means some new form of the currency, and it has to be backed by something credible. So probably at some point, not the dollar as we know it, but some sort of dollar, some sort of replacement of the dollar. I think we will be on a gold standard. I think that's the way the world will head back. We'll head back to some sort of standard where we have sound money again. When it will happen, it's very hard to say, but I think it happens in the middle of a crisis when they've got no choice.
Yeah, Rafi, what do you think about that? Do you think Trump is under control? He's like behind the Fed, not behind the Federal Reserve, but do you think that he would do anything to hurt the Federal Reserve? I mean, he's doing so many things that are so radical that I wouldn't be surprised if he were to do something to really cut down the power of the Federal Reserve.
No, I don't think he's going to do that. I mean, I remember him from his first term. He was trying to boss the Fed around, trying to get them to cut rates when he wanted them to cut rates. I don't think that anyone is really in control of anything. I think we like to tell ourselves like these. I think Tom Woods makes this point a lot on his podcast, and historically he's said this many times. Tom Woods is big in the Mises crowd and in the Ron Paul wing of the libertarian movement. So, I mean, he says like the idea that there's this group of people that it's really in control and they really know what they're doing and we're all at their mercy and we just don't know who they are because they're like these like dark shadowy people that meet in Davos or whatever. I mean, Davos is part of it. I'm not denying that, but it makes us feel more comfortable because if we are to get to these people and find out who they are and just like replace them or get rid of them, then everything can be fine again, at least in our minds. But really, the I think the truth is much scarier than that. I mean, it's both scarier and it's more comforting depending on how you look at it. It's what Julian Assange said, his biggest revelation when he really got into WikiLeaks and started seeing what's going on here is that the bureaucratic mess is just so overwhelmingly disorganized that nobody knows what the hell is going on. Least of all Trump. And you can see that with what Doge is coming out with and the things that they're trying to stop. Like like Musk couldn't even believe it when we found out that there's like this one guy who's responsible for pushing a button, like, yes on all the payments, and nobody knows who he is, and he's been passing it down from generation to generation since 1946. And we're like, oh, is that the guy? Is that the guy that's petting the cat in the room, in the dark room, and he's really in charge of things? Nobody even knows who he is or if he's a human. I mean, no, nobody's in charge of anything. This is all going to come to an end, and no one's going to be able to control when it comes to an end.
Yeah. Phil?
Yeah, the things like Doge they're important to show like just how crazy clown world has become, but there's no they're trying to reform something that is not reformable because the money is fake. Once you understand the money is fake, you understand that there's no way you can make fake money real. So these cut, the attempts at cutting all this stuff, it's fine, and these are good people. I can see they're trying to do the right thing, but because the money's fake, doing the right thing stops the exponentially increasing debt, or theoretically it should. Congress decided to ignore all of Doge's findings and just keep funding everything at full tilt because they have no other choice. So yeah, it's great, but don't spend. My advice to viewers is don't spend too much time focusing on Doge or expecting Doge to change anything or help anything. It's not. And neither will Trump's tariffs or bullying other nations into bending the knee. Either the monetary system continues at an exponential rate and we hyperinflate, or it doesn't and we deflate. Those are the only two possible outcomes. I don't think President Trump understands that. I don't think Scott Bessent understands that. They all have the mindset that the dollar is money and that money is a point system. And as long as you carefully manage that point system, you can keep it going on forever. They don't believe in commodity money. And until, everyone's going to have a quasi-religious experience about real commodity money very, very shortly, I think. So, and I do think the end game is nigh. I agree with Rafi. I think we're very close.
Yeah, so I mean, my conclusion, I know we're talking about this and everything's speculating whether they're going to revalue or not or gold back, but I guess the conclusion is that we need to be our own central banks and hold our own gold and silver. And I think if you look at Clive and Phil and Rafi, uh, if you've been holding gold for a long time, uh, you notice that everything, yeah, things are getting expensive in fiat dollars. But I was looking at thinking about the price of a card that I bought in 2010 and my card that I have now, and the price was about the same. But if I divided by the price of gold now in the UK, it's like a third of the price. So we're having deflation in real money, which is weird. And if you try to explain that to people, but we're having inflation in fiat currency. We've got a super chat here. Thank you, DZ015. The eventual capitulation of Bitcoin will be something epic to witness. Biggest scam ever, only second to fiat currency. Uh, let's ask, well, Clive, what do you think about that comment? It's not me saying it, but
Yeah. Well, Bitcoin's been around for 17 years. It's had many collapses and many rises, and it's still here. And I think the one utility which which people are relying on, is the fact that if they need to have a secret store of money because perhaps they're a chieftain in a village and they might lose everything, or maybe it's a battered housewife and her husband won't let her control her own money, it's a way of storing some value, and you can probably rely on it still being there when you run or get away or get to the other country. So people insure their houses for disaster. There's a lot of people who fear because of the situation they live in. Maybe they're in a political unstable country that perhaps one day everything they own will be taken from them. But they can't take from you the 12 words which are kept in your head, which hold the key to your Bitcoin. So that's the utility of it. So I don't think it's going to go away. It might crash. I don't know. It might double. I don't know. I'm not making any price predictions here, but I am saying I don't think this is going to go away. So I don't share that person's view that it's going to be the epic of all crashes. Of course, we're going to have our bad days. We always have done. But the other way to hold a store of value, if you can hide it enough, is gold. And that's what the subject of this show is about. So we'll talk about gold more than Bitcoin.
well, I don't mind talking about Bitcoin, but anyway, Edward Pocock the third, thank you for your super chat. Endgames, Endgame arrives either by a revaluation courtesy of the Tulip Bitcoin Act or the U.S. Treasury force uh, converts 5 and 10 year notes to 100-year notes, uh, going to the same train station. My shameless fiction book plug, American Calamity. Well, I think, yeah, if they convert 5 and 10 year notes to 100-year notes, that's the end of the dollar. I mean, why would foreigners want to hold any dollar anymore? And I think this might accelerate gold, the price of gold. I think uh, I mean, we saw on Friday gold closed above 3,000 for the first time on a weekly basis. So, yeah,
If you think of investments and if you think of stocks and bonds and other investments as promises for more gold into the future, and you think of buying because you get what you if you think of gold as money, you think of investments as an opportunity to get more money in the future. So the fact that people are rushing out to convert their dollars into gold now rather than investing them as they have, because what have people been doing since 1971? They've been throwing it into the 60/40 portfolio because it be promises to get more money into the future. Now people are not believing the money, at least instinctually. They may not be consciously doing this. This is just a mechanism of the monetary system. But people are saying, I don't believe these investments are actually going to return the wealth that they are promising to return. So people are flocking to gold and silver as the actual redeemable money rather than going through the promises because they expect, on some subconscious level, expecting defaults.
Clive, I know you're like a multi-asset guy, as you've said before, but would you like be prepared to jump off almost completely out of the 60/40 environment and go almost 100% physical gold and silver if everything were to, if you could see that things were imploding?
Um, One's always got to take a view as to what will survive some sort of financial catastrophe or economic collapse or hyperinflation. Um, Obviously, we do know for sure that gold survives almost everything. It's been around for 2,000 years and some. So it's going to be there. So that's a very safe asset to hold in a calamitous situation. But of course, we go through long, long periods and have been going through long periods where uh, people have been productive and the economies have been working and we've been in a capitalist system. And there are other things you can hold, from property to equities, which also hold their value and also pay you dividends. So I think I wouldn't. If I know the end is coming and it's coming next week, then yes, I want to be 100% in gold. But if I don't know that it's next week, I think I'd like to be diversified.
Hmm. What about you, Rafi?
Um, I'm not. Let's see. Trying to think of how much of my worth is actually in physical. I think it's like physical gold that I can hold. I think it's like 40, 50%, something like that.
Hmm.
Um, and then there's a percentage that's with me, and then there's a percentage that's not with me. Percentage, I have some in monetary metals with Keith, earning some interest. So that's nice. But then how much of that is going to help me in the end game? I really don't know. Am I going to be able to sign into my monetary metals account and tell Keith to send my money over here, and then they're going to it's going to pass customs, and then the Israeli agent is going to be, oh, here, Mr. Farber, here is all your gold, while everyone in your block is starving to death. Just we won't tell anybody. Just I don't know. So uh, so yeah, I haven't been I got married on July 1st, 2008, and then we put all the money that we got from the wedding in the market, and then September 2008 hit 2 months later. Then we lost everything that we got from the wedding plus like half of our savings. So that's really what has inspired me to be where I am today. If that didn't happen to me, I wouldn't be anywhere near where I am now, thinking about this stuff because I said to my wife, I was like, I need to figure out what the hell just happened here.
What were
Uh,
you doing? Were you working in trading in the markets when you got married, or
no, I
what?
was I was doing nothing. I was just I just gotten out of New York. I was in a year in rabbinical school, and then I just wanted to leave America, and move to Israel. And I had no idea what I was going to do. I was just a young kid. I was like 23 years old. I
Oh,
had no
okay,
idea
yeah,
what I was supposed to do.
yeah.
All I knew how to do was think about stuff. So I just did
Yeah,
that.
I think that crisis affected a lot of people. Uh,
Yeah,
yeah, I
I
mean,
have a very similar story to Rafi's.
yeah,
Actually,
I think like Jason Cousins from Glint. That's when he started thinking about money and gold, and that's why he started Glint. But we've got Sat Stacker. Thank you for your super chat. What are the options for the central banks, such as Bank of Canada, that don't hold any gold but hold U.S. Treasuries instead? Well, I mean, if I was the Bank of Canada, I would be trying to get some gold, even though I guess Canada is a big mining um, country. But I saw someone, I think on X, saying that Mark Carney, he's looking to sell all the U.S. Treasuries that they hold as reserves. I don't know. Clive,
well,
have
that'll speed the
you?
Canadian dollar collapse along, or
You know,
turn them into a
the,
gold standard faster.
I just find it funny that the name of the Prime Minister of Canada now is Carney.
Yeah,
Like,
like a carnival barker.
yeah, like a
Oh
car,
yeah, that's
like
right.
like a
Did you
carny from
know
a
that
carnival.
Mark Carney's mom is I think her brother is married her brother is married to Justin Trudeau's mom.
It's like the new Habsburgs or something.
Yeah.
They're all like inbred
Yeah,
and hemophiliac but instead of hemophiliacs, they're like liquidity philiacs, and they just keep bleeding all over the place
yeah,
and just causing us trouble.
yeah. I think
So
I find. Go ahead, Clive.
I was saying, Barry, you're trying to turn this into a nice soap opera, so people have to come back next week and see who's married who.
Yeah. Well, I just thought I heard that and I thought it was interesting. But Clive, I want to show this chart. I don't know if any of you guys follow this guy on X. He's a Swedish technical analyst, and this is an interesting chart of gold uh, here.
Mm.
And he said 53-year chart, the three gold moves for the present monetary system. So that,
What's going to be funny is the technical chartists on a gold standard, stocks deflate over time. People don't necessarily
yeah,
know
yeah.
that, but everything goes down in price over time, including stocks. So that all these technical chartists are going to be having a very different line of work when we're investing in companies over on a gold standard.
Oh yeah.
Like all the graphs will be pointing down instead of up.
Yeah, I mean, I already, let's have a look here at if you look at Dow, Dow gold ratio.
Yeah, there you go.
I
It
mean,
goes slowly down over time.
yeah, and it's been in a bear market since August 1999, really.
Hmm.
How far back can you go with that?
Uh 1920s.
Okay.
So I think if
1897.
you see it's like a megaphone if you draw this.
Yeah, so looking at that chart, it shows that stocks are where they were in 1929, Mario.
Yeah,
Oh, wow. That's an interesting point. Okay.
yeah. Well, yeah, they're just yeah,
Rocky's gonna make a video
they
about that now.
look how
Uh,
they had a tough time going above where they were in 1929 right here.
Yeah.
And in 1960s as well. It was only
yeah.
1999 that they went way above. But I think some people think we might even go through 1 to 1, the Dow Gold ratio. Because if you draw, let's see, I've got
So that more than anything proves the bubble has not popped yet.
no, no, but you see
So,
it,
so it means either the gold has to go up a lot or stocks have to come down a lot.
Yes.
or you could even have, yeah, I think. I, I mean, you could say gold could go, stocks could go up, but gold will go up even more. That I guess that would be a hyperinflation, but it's probably going to be more collapse, I guess, deflationary collapse. I don't know. Yeah, maybe we could touch upon that. What do you think, Phil? We'll start with you. Are we going to get a deflationary collapse or a hyperinflationary collapse?
My bet would be a hype. They're really two sides of the same coin, but my view is going to be hyperinflation. I'm somewhat academically trained in economics, and the all the textbooks that I went to college with say the Fed should print. It is a moral good to print to avoid a crisis. That is the good thing to do. So to and the lesson was that is from 1929 when they did not print and we went into a deflation. So that's where Keynes came out. He said, "You guys should have printed. If you had printed, we would have avoided this whole thing."
Yeah.
So the idea that like they're going to reverse course on all the academic literature that's been written, all the Keynesian academic literature that's been written since the 30s. I don't think so. I think they'll print. Now, my thing is Trump going to try to grab control of the Fed before they print or not? Because if he does, it's a live hand grenade. So if he grabs it beforehand and says, "You guys are doing it wrong. Give it to me. I want to hold that hand grenade," then he's probably gonna eat the blame for that because they're gonna say, "Well, you're the one holding the money printer button," and he's gonna have to make that choice. Now, if the Fed, if he lets the Fed maintain its independence, or it does its own thing, then maybe he doesn't get the blame and can be in charge of the rebuilding.
Uh, Clive, what do you think? Are we going to see a hyperinflationary or a deflationary collapse?
Um, I think we definitely go down the road of higher inflation and ultimately, in the long run, hyperinflation. The reason we go to higher inflation is again, it comes down to the level of debt, and we get to an interest rate down the line when the public at large say we would need a higher interest rate to lend you money, and the government is then forced to turn to the Federal Reserve and say, please would you help us out by buying some of our bonds because we can't have these interest rates going any higher. So the Fed helps out, starts buying bonds. That basically means printing money, pushing money into the system, and as it does so, we have a melt up in asset prices, which obviously the president's going to love because it means the stock market goes higher, the gold price goes higher, everything goes higher. But the knock-on effect of that is that we then have inflation going up a lot because commodity prices will be higher, labor costs will be higher, and that will turn into higher inflation and probably down the line hyperinflation. So yes, I think we're going to get hyperinflation. Maybe not immediately. I think the first steps are, broadly speaking, higher asset prices, then higher consumer prices, and then hyperinflation.
Yeah,
If I may
yeah,
counterpoint real quick, the all the research I've done on hyperinflations, there's one thing that sticks out is everyone is always shocked by how quickly they happen. Everyone thinks, oh, we're gonna do this, and we got a few more years get a few more years yet, and then suddenly one day you wake up and the money's worthless. So Clive might be right. I'm not saying he's not right. I'm just saying that it could strike any day, and there's no one is smart enough to know exactly when it's gonna strike. The best we can do is look at history and see what we can derive from that.
yeah.
Well, I think one scenario which goes in line with what you say, Phil, is we get into some sort of crisis where we've probably got the central bank digital currency up and running, and one day you wake up and you learn that you're no longer allowed to transfer more than X into your CBDC wallet unless you get permission, and permission will only be granted under certain special circumstances. So suddenly you effectively have two currencies running in the United States, one which you can't spend at all, i.e., the dollar you have today, and the new one, the central bank digital currency, which you can spend, but you're only allowed to convert a small amount or a limited amount or none at all of your old currency to the new currency. So effectively, prices in the now defunct currency, the old currency, go to the moon. They go to infinity because that old currency very quickly becomes worthless because you can't spend it.
Yeah, maybe that's what the ECB is trying to do because they're coming out with the CBDC already in October. That's a good point, Clive. Rafi, where do you see it? I guess you view hyperinflation and deflationary collapse as the same, right?
Yeah, it's the same thing. It's just one is in gold terms and the other is in dollar terms.
Yeah, yeah,
That's all. And what we're discussing here, like what Clive is talking about with the move to a CBDC from the currency that we have today, and you're not able to spend, you can only spend X. This is all. It's just a different generational format of saying like we're going to lock down the ATMs and you can't withdraw cash. I mean, it's the same thing. It's all the same mechanism, just with different technological steps to it.
yeah,
We're all describing the same thing.
It's different this time, Rafi.
yeah. Yeah,
Yes.
I guess what's important, Clive and Rafi and Phil, is if they're gonna, and we know they're probably gonna try to do this with the CBDC, is to keep, yeah, stuff outside the system. If you're outside the system, they can't. Well, they could try to come knock on your door and take it, but I mean that would be a last resort. Vance Kistler, thank you for your super chat. He doesn't have a question though, but. One of the reasons Phil said that he was taught at university that because of the mistake of 1929 or the 1930s, that we should always print. And so that reminded me of this kind of this speech by Ben Bernanke in November 21st, 2002. And I'd started buying gold in June of 2002. And I started once you buy your first gold coin, mine was a Krugerrand. and my wife and I decided to buy just to diversify from the stock market. But then I bought it, and then you start looking into things and you start digging. So when I saw this article, and he wasn't chairman of the Federal Reserve, but I knew that he was being kind of groomed to replace Greenspan. When I saw this, I said, I've done the right thing because these people are crazy. And I think there's a part here in this speech where he says that the US government has a great technology that prevents the.
Called the printing press.
Yeah, yeah. I think it's, where is it here? Oh, yeah, here. The conclusion is always reversible under a fiat money system, follows from basic economic reasoning. May a little parable may prove useful today. An ounce of gold sells for 300 more or less. Now suppose a modern alchemist solves his subject's oldest problem by finding a way to produce unlimited amounts of new gold at no cost. Um, and then he goes to say, what has this got to do with monetary policy? He says, like gold, US dollars have value only to the extent that they're strictly limited in supply. Oh, and this is what I thought was crazy when I listened to this guy say this. I thought he was the new John Law, and I think history will see him as that. He triggered what's going on now. He said, but the US government has a technology called a printing press, or today it's electronic equivalent that allows it to produce as many US dollars as it wishes at essentially no cost. I mean, there is a cost to the consumer, and that's like the loss of purchasing power. I thought that was crazy that the next central, head chairman of the Fed was writing this. But I thank him for warning me. I'm sure a lot of people saw this, and I can't understand how they didn't see it. Had you guys seen this?
Yes, I actually read this. I read this back in the day as well.
Yeah.
This is the story about the printing press is widely quoted, and the reason he was saying this is we never need to have a depression again because we can always print our way out of it. But then he goes on to say in the same article, of course, the government is never going to print willy-nilly. Well, look where we are now.
Yeah.
What's amazing is that we're considered the crackpots in this scenario. It's very odd. Like we're the crackpots limited to the corners of YouTube, but the central bankers who
Yeah.
think they can generate unlimited wealth are the
Yeah,
ones
the
leading
other,
the college lecture series.
Yeah, and we have these these foundational stories of our culture of the paradise of Eden and then original sin and then okay, now we're going to have to work and there's going to be pain and women are going to give birth and they're going to be in pain and we're going to eat bread from the sweat of our brow. And then all of a sudden Ben Bernanke comes and he's like, "Yeah, well, that's all done. We can print now." It's like what why why do people why did people believe in voodoo back then? But we believe in the same thing. Nothing changes. We're all the same stupid hairless apes running around with these crazy ideas, not willing to deal with our own mortality and our own pain that we have to deal with.
and I think still a lot of people believe in what Ben Bernanke said, though. That's what's scary.
I think Phil had a good point. We are kind of when we talk about gold, seen as the weird bunch because I can tell you almost nobody I know can tell me what the price of gold is, what the price of silver is. They're not watching it. They're not interested in it. Yeah, sure. If you ask them the price of Nvidia, oh, it went up yesterday, it went down yesterday. They're into that, but they do not follow gold at all. And I'm talking about almost everybody. But the time will come when they're moving into gold, but we're not there yet. It's we're a few lone people, but at some point, other people will start to get interested in it. And I think the time will come when the shine goes off the stock market. I mean, these technology stocks are at the moment rather overvalued, and I think they're going to deflate. I have my reasons. I've expressed the reasons on YouTube and on LinkedIn. So I think they will deflate. When they've deflated and stayed deflated for some time, I think people will be looking around for something else to follow, and that's the point at which maybe gold will be one of those things. You need a very, very small amount of even one stock of Nvidia to move into gold, and the price would be a lot higher than it is today.
Clive, can I ask you? I mean, you've been in the markets a lot longer than we have. I'm not sure about Mario, but the, eh, during 1980 or 2011, was there any time when you saw any kind of wake up in terms of the public understanding or wanting gold or knowing what the price is?
There was a time, um, and I'm trying to think. I think it was more than 20 years ago. It was the early 2000s, and there were a lot of people interested in gold back then. I think. I mean, when I say a lot, certainly a lot more than I see today. Today, there's nobody interested. Um, so I think it was about 2002 to 2010, something like that. And the gold price was indeed rising from, about $200 to $1,000 at the time. And there were a lot of people writing about it and investing in it. Of course, we were investment managers. Well, I was a wealth manager, but we had at that time an official allocation to gold. But after about 2010, that 5% allocation to gold that we had in the portfolios gradually dissipated down to zero. That was the decision of the asset allocators. So legally, I mean, not legally, but potentially you shouldn't be putting any gold into the portfolio from sometime probably about 2013 onwards. Maybe it went down from 5 to 4, then 3, and they kept allocating it to other things like hedge funds. But luckily, as far as my clients were concerned, and the bank I worked for, we had a leeway allowed by the compliance department. Your clients could be 5% away from the official allocation, which meant that if the official allocation to gold was zero, which it was, I could get up to 5% in gold without having a knock on the door from the compliance department. So actually, all my clients did in fact have gold, and it did them very well.
Yeah.
Mhm.
Chris Conman, thank you for your super chat. He says, we know the government cooks the books when they release their data monthly, quarterly, etc. Could the same be said about the money supply? Could this number be cooked also? Thanks. Phil, do you think they cook money supply numbers?
I don't think so, just because it's growing up exponentially as it is. So it doesn't really matter if they cook it or not. I mean, it's
And
still
most people don't look at it either, do
still
they?
doing that.
I think
So
one thing they did about 20, 15 years ago,
yeah.
they got rid of M3 because they didn't want people to see
Yeah,
that.
they shut down models that they don't
Yeah,
like, or they rejigger like
yeah,
the inflation,
yeah.
the CPI. They
You
just
know,
they
t
just that a
talking
bit.
about Rafi was asking about people talking about gold, and he asked live today. I played golf, and then after we finished, we went to have a drink with all the we were about 9 people, and they're talking about premium bonds, Clive. And for Phil and Rafi, you probably don't know what premium bonds are. Here in the UK, it's a government backed bond. Let's say you put £100 and they do draws every month, and you might win like £50,000 or you might win nothing. So, but your £100 is always there. And these guys were talking about, well, I'm going to do this with the premium bonds. And one of them said, yeah, even if you don't get anything, the money will always be there. And I said, not the purchasing power though. And they didn't even like get that, which I thought was interesting. And one of them laughed, "Well, Mario just does gold and silver," and they said that as if it was I was crazy actually, even though the price of gold has gone from 220 pounds 20 years ago to 2,300 pounds. So I mean, to me, it says that the bull market in gold and silver is still like really early. Is that the way you see it, Rafi?
Yeah, I don't know if well, it depends what you mean by early. Does
Well,
that
there's
mean
still a lot to go.
Yeah, yeah. I mean, a lot. There's going to be a number where it's not going to matter anymore. So how close are we to that number? Maybe it's early in terms of, okay, so now we're at $3,000 an ounce or 2,600 pounds or whatever it is, and we might get to, I don't know, 40, 50,000 by the end game. But how far away is that in dollars versus how far away is that in time? It could be very close in time and far in dollars. So we're at the beginning stages of the bull market in dollar terms or pound terms, but I think we're at the end in time terms.
Yeah.
There's a lot of most people in the world are decent, hardworking, and they just want, they just want to save their wealth and, go about
Have
their
it.
day. They don't want to watch a 2 hour video on a Sunday afternoon of us four talking heads. Yeah, there are people who like it, and I enjoy it, and I watch this stuff all the time. But most people are not us, and it's too bad because that's where the theft is. Not educating yourself on this, and I consider myself just as guilty. I mean, I didn't understand this until pre-COVID. I was, heavily invested in crypto and not really pay I was riding the inflation wave like everybody else. It's only when you pay attention you say, oh, that's not right, that change the way you view the world.
Clive?
Well, let's just come back to your premium bonds. What is the value of a lottery ticket?
I think, well, how much it costs to buy one, or
No, obviously, if
Theoretic
you buy
he's
a
philosophically he's speaking
yeah, it
if
could
you
philosophically.
yeah,
be
if
the
you buy
value.
a premium bond, the only reason to own it is the hope that you're going to win that $1 million prize that they
Yeah,
have
yeah,
every month. Um, but what's your chances of winning that $1 million prize? It's one in 100 million. I don't know what it
yeah,
is
yeah.
exactly, but
I
it's
think
very, very low.
lottery is 1 in 14 million, isn't it? Oh, I don't know.
So, but at least the bottom line is if you buy a premium bond, when you get your money back in a year, 2 years, 5 years, you get back what you put in. But of course, you know that when you get it back, it won't buy you as much as it bought you when you bought the premium bond in the first place. But if you've been lucky enough to win a large prize, no problem. But 99.9% of the people never get that large prize, and therefore they're actually being robbed.
Yeah, but yeah, because you and I and Rafi and Phil know that, they inflate away the purchasing power of the currency, but the most people don't understand that, which is a shame. Dimitri, thank you for your super chat. Is it just me, or do you also see that our overlords are no longer slamming gold? Well, they're having more and more difficulty, and I think they've been caught short. They slam it. They slammed it a couple of times this past week, and it rebounded really quickly back above 3,000. I think it's because they've been caught short. They've lent out too much gold. And some people want the physical. That's the whole problem for them, that people want physical.
Yeah, the short squeeze that the I did a video on the Comex. If and I don't know if the Comex short squeeze is going to be the thing that breaks the system, but if they actually start redeeming it and they go and Comex goes, we don't they run out of gold, they run out of physical, then we could see like the spot price go like in A for a couple days. And just no one knows what the spot price of gold is, and whenever it comes back online, it's gonna have many zeros added to it. So that might be the in-game trigger right there.
Is that how you see it too, Rafi? Or
I don't know. I mean, I'll when it happens, I'll say this is exactly what I was predicting.
all right, guys.
Nostradamus over here.
Yeah, we're past the hour mark, so I'm gonna thank you all three of you for coming on. I really appreciate it, and also the viewers for your interest, and wish you a great week.
My pleasure.
You're welcome.
Thank you, everybody.
And the stream. All right.
Phil was about to tell a story there.